All right,
All
good to
right,
go.
cool. Hey guys, hope everybody's doing well. What's today? The 22nd of August. Been a pretty quiet week so far as price action's concerned. A couple of things to talk about, like on the development side, but you guys just want to jump into the Bitcoin chart.
Sounds good.
By the way, real quick, how's my audio? Is it okay?
I can hear you.
Cool. Awesome. All right, thanks guys. So I'll just kind of talk about what I see, and just as far as like potentials go, right? Like it's really easy to do this, to like zoom in and like go, okay, what about this level and this level and this level? But I think it's just a really smart idea to really zoom out and talk about things on the bigger picture. So let's do this. I'm going to just pull up. This is a dashboard that I have, just kind of showing the different time frames to kind of help get an idea of where things are. So I typically, like, every morning, my routine is kind of like this. I start by looking at the weekly, and I look at kind of the key areas and really just zoom out and look at the really long picture. For you guys that like log charts, you can use log charts, and obviously there's a host of different indicators you can throw on this. I'm just, when it comes to technical analysis, I've used every indicator under the sun, and I just like to keep things very, very simple. And from time to time, I'll add different indicators to try to come up with a thesis or see if there's any confirming information. For example, like on gold and some bond markets and stuff like that, like you can throw on things like Ichimoku clouds and what am I clicking here? There we go. So like, if there's any kind of indicator that can help you or give you confirming information, moving averages, oscillators like RSI, MACD, anything like that, you can use those. But in general, I just think that the most important thing is price and volume. And especially whenever I'm looking at a longer term chart, I just ask, like, okay, what are the major areas? What is the market sentiment? And obviously like the fundamentals behind that. And what are the potentials that people could do over the medium term? I think, with Bitcoin, especially Bitcoin, it's really hard to predict more than a few months out. And it's also really hard to predict a few minutes out, right? Like there's a lot of noise very short term, and there's on the opposite side of that coin, there's a lot of uncertainty and variables with the super long term, like 6 months more and out. We don't know what we don't know, meaning like there's a lot of black and white swan events that could happen. We don't know how certain people are going to react to certain news pieces, right? So like for me, I find my sweet spot is like a few weeks to a few months out, where you kind of can ride the bigger trends and you don't get shaken out by the noise. And you're also not trying to predict so far out that there's a lot of things that could get in the way of your thesis, right? So for me, I start by looking at the weekly, and then I say, okay, what are the key areas? What is the information that this is telling me? And at this point in time, the weekly is kind of showing us the same thing that we can see on the daily chart, which is where the major support and resistance zones are, and the fact that we are consolidating, right? And the more that we squeeze here with falling volume, the bigger the move typically is after we come out of the consolidation zone, right? So the markets are kind of like a heartbeat, where you have contraction and then expansion, contraction, expansion. And the expansion part, or whenever we're getting big runs and retracements in price, is really when things are the most fun and the most interesting. And kind of the consolidation is when things are the most quiet and the most boring, right? But boring doesn't mean unprofitable. Like a lot of people that are new to the markets make that mistake, right? They think, oh, just because price is flat or consolidating means that, there's no money to be made. But that's really not the case. It's oftentimes the quiet times is when you can position correctly and not get shaken out and not overthink things, right? So jumping back to the daily chart, just kind of looking at what I see here. Obviously, we've had a bullish bias the past couple of months ever since we broke out above this resistance level. We went from a long-term downtrend to a very short accumulation period, and then we've been in what we call phase 2 of the market cycle. Now, one thing I've been thinking about, and Rocky, I wanted to get your opinion on this too, is there's really 2 ways that I see this market cycle playing out. One is the obvious bull scenario, which is, phase 2 leads to phase 3, right? So this could trend, and we could have anywhere from, 6 months to 2 years of nice trending market cycle that could bring us to 50K or 100K or something, right? That's like kind of the extreme bull case. But the bear case is something that I've been thinking about increasingly more is, well, what if this is kind of like a mini market cycle or a faster market cycle than 2016 to 18, right? Because that was kind of like a 3-year complete cycle where actually more than that, it was 15, which was accumulation, 16 early trend, 17 parabolic, 18 deflation, right? So what I'm seeing now is like, okay, the longer term bull cycle, if buyers can stay in control, we obviously know what that's look like. In the past several months, every week we've been talking about what those potentials look like with, multi-month breakout patterns and extensions to the upside, right? Now, the bear side of that, which is still a possibility, is, okay, well, what if this was phase 3, meaning the move from 9 to like 14 was parabola? If buyers can't hold up here, if something happens, either a black swan event or market sentiment or something with, right now there's a lot of stuff happening with the global economy. My hypothesis is that if there is a recession in the US, if there are, if there's a lot of fear, and if equities, if stocks pull back really hard, I think that initially is actually going to be bearish for Bitcoin's price, because what's going to happen is people are going to have a knee-jerk reaction, and they're going to sell most of their assets. Most asset classes will take a hit initially because people need to try to free up cash, right? That's just what happens in recessions. People sell stocks. They even sell gold, even though gold tends to go up longer term, especially after recessions or later in a recession. Initially, kind of the knee-jerk reaction is, okay, well, we need cash to live, so let's sell stocks, let's sell, real estate, let's sell gold, let's sell, for crypto holders, let's sell crypto to be able to pay our bills, right? So that's one thing that I think is a possibility, is if there is just kind of a fear reaction to US markets or even global equity markets, like that could actually initially spell for some short to medium term bearishness in Bitcoin. That's just something I've been thinking about. Again, I could be wrong. Like, the stock market could pull back 20% over the course of a few weeks, and then Bitcoin just holds up, right? That's also a possibility. But what I'm trying to do is mentally and logistically just prepare for, okay, what does that look like if this market cycle gets cut short and we don't continue to make all-time highs by, say, the next halving, right? Which obviously I'm leaning, from a probability standpoint, I'm leaning biased bullish. And when I say bias, I don't mean that in some like emotional way. What I mean is like, I'm literally putting my capital where my hypothesis is, right? Which is I'm long Bitcoin, right? But I'm also at the same time, because we've gone from 3 to 14K in less than 6 months, like I'm also thinking about the downside to that too, and having a long working from around 10K, which is significantly higher than 4K. I need to be even more cautious with the downside. So that's just kind of my thoughts on the big picture. Rocky, what do you think, man?
Yeah, definitely. It's always good to look at both possibilities, because obviously, nothing is 100% guaranteed at all, and to perhaps create a plan as to what to do in the bear case scenario. When I look at the current market structure, right now the current market's showing us on a technical level that it's still bullish. It's still in a bull trend and that we're consolidating. So maybe we could talk about like what I would expect if we did flip bear. What I would look for as signs of that would be, let's say we were to snap those levels of support and crash from the top by at least 50% and then dead count and create a lower high, right? We're kind of like we've had the momentum on the bull side. We've had a healthy correction. The correction is in my opinion, within a healthy percentage range. It's currently consolidating within that range. So everything's telling us that the market is still trending bull. But in order for that to shift, what I need to see is perhaps at least after the initial volatility phase, like if we did have a breakdown, it would probably be a washout. It would lead to a deeper pullback, let's say at least 50% from the top. And then if it dead cat and it started to go into like a bit of a slow bleed, slow grind down, I think that also like major area that's kind of been like a magnet area for a long time throughout 2018 was like that 6K area, right? Yeah. We've kind of shot well past that in this run. It didn't really pose much resistance at all. It posed a little bit of initial resistance on the first break. But it just kind of blew past it with increased momentum. Even if we did flip into a more bearish type scenario and had a big washout, I'd probably still be a dip buyer for bounce plays. To especially since I've mostly just been focusing on the spot markets. That's really the only way to really make money in the spot market is to buy low and sell on bounces, or to sell, ride trends and then sell along the trends. So we know that if it's still in peak volatility phase, there'll probably be some nice bounce play depending on how it broke down, for sure. But then a slow bleed, I think the worst case scenario in that sense would be after the dead cat. If it just start to have this slow bleed and then grind down at 6K again, then that would start to look really we'd start to look really bearish, where we'd be breaking down multiple support levels, which would invalidate that consolidation that we're at right now, and so on and so forth. And you've kind of got those two areas mapped out, which is like a big block area. And the Bitcoin price technically could still crash lower and then consolidate into a much larger pattern if it needed some more time to develop, right? It's nice that it is consolidating at the 10K area, just to kind of get acquainted with that 5-digit price zone, which is a huge emotional price zone, and to consume or accumulate within that price zone, to consume supply within that price zone.
Yeah.
If we start to snap below the 6K mark, then suddenly, that to me would be that would start to definitely, invalidate this and make it look like more of a dead cat. And then perhaps we'd have to go back into another prolonged accumulation cycle from there, right? Which could even break new levels. That would be like the worst case scenario, so on and so forth. But thus far, that's what I would look for if things were to flip into bear territory, like the signs that I would see, basically going back into producing lower highs and lower lows. Thus far, we've been doing higher highs and higher lows. So, I guess it's bull until it's not.
Yeah. No, I agree with that. I mean, and that's one of the things like that. You don't want to overthink it too much, right? But at the same time, you don't want to ignore the downside. But like if you look back at like 16, right, and you look at these as kind of a guide for what could possibly happen, like one thing that I kind of see right now is the potential for something like this. So like imagine that price right now is like or similar to what it was back here. And I think this was the Bitfinex hack. But imagine, like right now, we're kind of seeing something like this, right? Where we had the initial breakout, we had some follow through. So imagine that this is like 14K, and then we've had consolidation. We were actually watching this, and you notice how we had that snapback. So on a percentage basis, from once it broke that triangle, that was about a 20-25% sell off to retest prior resistance turn support, right? So there was some really nice market structure there. Imagine if something like that were to happen now, where say the momentum, the pressure built in the price action, and then like look at this red line as like a potential dip. That would be about a 30% sell off to that 6K price level. I think if that was an aggressive sell off, that would be a potential good dip buy opportunity, right? Kind of like what we were thinking here, right? Like we were looking for like one of those fast washout dip buys, but what that really turned out to is just kind of like a consolidation, right? But if we got something even deeper like that, that to me would be pretty juicy. Where on the other side, like say this holds up and instead of a wash down, we get a breakout above 12K, which as we can see, I mean, that's confirmed as really strong resistance, because on the weekly, and this is what I like about the weekly is the wicks actually show where kind of the thinly traded volume or kind of the short-term parabolic moves go, right? So you get a spike up, but when you can't get a weekly bar that closes above a price level, that just establishes and shows that like, yes, there is trading happening above that, but it's not able to sustain itself above that, right? So let's say we got like a weekly candle where like say we coil, break up, and we get a close at 13K. That to me would be a sign that we're going to go for another larger extension of this bigger trend, right? So like you could run from the low here to that pivot high minus the retracement, and look how accurate this is. Just look how like precise that 100% extension is. It lines up with the all-time highs. So from a risk to reward standpoint, much longer term, right? And again, anything could get in the way of this, but just looking at that, you've got from that breakout about a 50 to 60% move to the all-time high. So it's kind of interesting. And obviously like in the way of that, you got the 61 extension around 15K, which is also another area of prior resistance back here. But that's just kind of what I see on the bigger term pictures as far as possibilities and probabilities go.
Yeah, for sure. And both those scenarios can be a win-win situation. So just as an example, my last take profit on Bitcoin was around 13K. I haven't bought back into Bitcoin with it. Initially, I had some orders at 8,500. It didn't wick down that low. I pulled those orders and I just have the USD. I did put some of the profit, probably maybe 15% of it or so, into some long-term Leo, just as a position to have some in case it does something interesting. And then a little bit of Doge just because it dropped into the lower Satoshi range as starter positions. But if we had a washout where we had a nice dip buy opportunity, I would definitely jump on that opportunity to load up on some more BTC, especially if it ever made it down to those lower levels. Even if it did flip bearish, there'd be some volatility from a washout like that. That said, if Bitcoin were to break out and continue, as far as my longer term Bitcoin holdings are concerned, that at that 13K level, that was like my last kind of take profit within these price ranges until we break all-time highs, right?
Yeah.
So I'm okay with being patient and waiting. I've got some BTC from the lower regions, and also obviously still some from like 2015 and such, just longer term stuff. So that would be all right as well. Now, obviously, where it would probably where we'd have to see where the greatest impact or bloodshed would be in alts. Like, how would alts respond to that type of situation, right?
What, a washout?
Yeah, washout. You know,
Yeah.
basically the trend has been pretty much for the entire bear trend is that when Bitcoin bleeds out, altcoins bleed out as well, right? So you can end
Yeah.
up testing some new lows and stuff on alts. However, there's like a lot of alts. There's been a lot that have died, so there's been a cleansing of alts. There's been a lot that have already done full retraces. We don't know when the tides are going to shift on altcoins as a whole. But what's interesting with alts is when they do, it usually happens randomly, and it usually happens when people stop talking about them. Like once people
Yeah.
are so broken and disgusted with alts to the point where like no one wants to even talk about them anymore. Uh, in the past, that's where I've seen them make just these sudden random shifts out of nowhere, right?
That's very true. Yeah.
It's extremes, right? We're playing off the pendulum swings of the extremes of the market, whether it be extreme market sentiment, or whether it be just extreme price action. You know, extreme parabola usually leads to crash. Extreme lows can sometimes lead to random pumps or reversals, without like necessarily trying to predict when that moment's gonna be. So that's why, in a lot of ways, I've kind of just positioned. I'm kind of positioning everything as a cyclical trade right now. Haven't been doing a lot of mid or short term stuff. Just kind of looking at things through the overall large cycle. Having bought a bunch of things even in the lows, and I've kind of taken profit about twice this year, just to kind
Yes.
of reduce and test the waters on a few things here and there. Projects that I find interesting, just kind of dip my feet into it. Except for obviously, like my biggest positions are still Tezos and Bitcoin. Those are like the biggest chunk of my crypto portfolio, right?
Yeah, and it seems to be like just as a general theme, right? Because like the themes in crypto change. It seems like at least once a year, right?
Mhm.
Like at one point, fun
For
token
sure.
ICOs were the hot stuff, and then at one point it was just Bitcoin. At one point it was Ethereum. Now it seems like
Yeah, privacy coins, masternode, smart contract coins.
yeah, yeah. And even what my buddy that's really plugged into Silicon Valley said, which I read his message in here, was it last week? Where he
Yeah.
said like basically what a lot of VCs are focused on, which is totally, I mean, this makes sense. It's not, some like crazy epiphany. They're focused on Bitcoin, obviously. They're focused on coins with staking and baking and stuff where they feel like they can have some level of influence or control. And then they're focused on security tokens where they can actually get equity in a company.
Yeah.
Everything else, there's so much hype. And I feel like, and I've been saying this for over a year now, but I still, even to this day, feel like there needs to be a lot more pruning in the altcoin space. I mean, if you just look at, Coin Market Cap, there's still over 2,000 assets or 2,000 cryptocurrencies. And if you just look at the list and some of the market caps that are tied to some of these projects that we know to be shit, it's like, I feel like a lot of these have to die. So like, I feel like, and this is just my opinion, the altcoin markets are going to get uglier before they get prettier, but the ones that do well are going to outperform it. Like say it's 1% of the altcoin projects do well. The ones that do well are going to really, really outperform everything else by like a massive margin. So that's why I just feel like it's still smart to be very, very selective and to be very aware of position sizing and to know what you're getting into. Like I still get contacted by people that are like, hey Chris, like I use the shotgun approach and I'm still like dip buying everything. And like, I'm like, all right, man, if you guys like slow bleeds and just want to bag hold 50 to 100 things, like that's just not my style, right? Like I'd prefer to go bigger on fewer quality projects.
Yeah, I'm just curious. Going back to that total two market cap chart that you're on.
Yeah.
What was it? Let's go back. See what the initial from the last cycle, what it looked like, the initial market.
What do you mean before the 17 pop?
Yeah, yeah. So basically, you had the market caps are obviously growing. So the cyclical charts aren't going to be the same as like price action charts. So I
Yeah.
you know, like you see the early days there, the market cap's a lot lower because there's just overall the entire crypto markets were just newer, right?
Yeah, I mean there wasn't much here, right? Like most of this was Ethereum and then like Ripple and maybe a couple others.
Yeah. So the initial, so you had that when you, let's say that lower end of the cycle where kind of like it has a big crash, a full retrace, spikes up, has a first bump, retraces, kind of
Yeah.
breaks out of that range, right? That's
Yeah.
that's the type of behavior that I would look for if altcoins were to suddenly end up having another alt season anytime, you know, later this year or in the beginning of 2020. What I'd look for basically is like a higher low. So right now we have no confirmation of a higher low on that overall market
Yeah.
cap. We do have we did have an initial break, so we did take out a previous high and dip.
Yeah, it's kind of like this, isn't it, Rocky? Like, you know, you can try to guess where the low is in Ripple. Let's go down to a daily, but until you get, you know, I think we talked about this last week, until you get a higher high
Yeah.
and a 1, 2, 3, 4 breakout showing some confirmation, you could bag hold this to for like a multi-year slow grind.
Yeah.
Right. And if you're cool with that, go for it. But like if you want to be more precise and get your timing a little quicker, that's something that we could look for.
Yeah, and that's something that's happened previously on stuff like Ripple. You know, before it even had a bull trend, even like a lot of alts, but especially Ripple, before it even had that massive bull trend,
Yeah.
it just kind of like bled out for a year and a half plus. You know, like it just
Yeah.
kept grinding
And that
new
was
lows.
more of accumulation, right? Because it was so early there, you didn't have a prior cycle to go off of.
Yeah.
This, it's like it had its cycle. And now like the risks associated with Ripple are like, you know, people are fully aware of that. So
Yeah, for sure. Yeah, did it? It looked like it looks like it almost cracked a new low, but it's still, yeah, kind of just tested a new low. But if it chops around, it's still within this range. So yeah, confirmation on something like that would be breaking out of their range and making higher highs.
yeah.
And increasing by.
So you can see, yeah, 30 cents was kind of a key level. That was the breakout that we traded in 17. And then, you know, you could make, I don't really even know where to draw the support down here. I mean, anywhere from like 15 to 20 cents is kind of the next level.
And then we're talking, I think it was last week or the week before, you know, when you're looking at the underlying fundamentals, it's like, okay, well, why did Ripple underperform every other crypto asset except for the ones that died? And, you know, we just talked about how, you know, they still control 50% of the supply, being selling $250 million, you know, every quarter type of thing.
Yeah.
Give or take, right? So that's just a lot of sell pressure. And is there enough demand in the markets? Is there enough retail demand? I think a lot of markets are kind of competing for liquidity. And I think what'll need to happen to actually be able to launch, what I would look for in an alt season, is I would look for a few projects, a handful of projects that actually take the charge and take the lead on rallying, right?
Yeah.
Kind of like a 2016 Ethereum type scenario, where you have one liquidity
Yeah.
like shifts heavily into one market or a few markets that lead a charge, build a lot of momentum, and then profits spill out into other markets type of thing.
Yeah, that's a really good comparison because like in the early days of Ethereum, there weren't 2,000 projects to look at, right? It was like a handful of stuff. You had like the old like 2014 stuff that was dying, like what was it, Mastercoin and some of the quote unquote colored coins they called them back in the day.
Yeah.
But yeah, like that's what I think is going to happen on the next alt cycle. It's going to be what, maybe 1 to 3 that you look at and you're like, how is everything like bleeding, like showing like death, and then like these few projects are like posting like double or triple digit gains? Like that's what I think is going to happen.
Yeah, and then there's usually like if you get a few strong markets that lead and break the ice, then sometimes what ends up happening is that market makers, market movers will take some of the profits, spill it over into like shittier markets, and you can get these like secondary pumps, or like it creates hype
Yeah.
where people start copying all the clones. Like whatever
Yeah.
whatever the biggest, like after Ethereum popped off and went nuts, suddenly like the market started like chasing all these Ethereum clones, like Expanse and all these random, and you start getting these crazy pumps, like Expanse pumping like 2,000+% in a day, and crazy stuff like that, right? So it's
Yeah.
usually like this. Sometimes it could spill into like a bit of a hype cycle, but overall, when you're talking about like coins that'll survive into the next cycle, and what I mean by next cycle is that if and when Bitcoin breaks the all-time high, right? And if and when it has its next major parabolic blow off top, type of thing, where you can get another crazy all tides rising type scenario where you get a new wave of retail users rushing on board and stuff. In the
Mhm.
meantime, one has to try to pick solid projects that could even have a chance of surviving that. You might get these smaller alt seasons and stuff, but in that process, we're gonna continuously see more projects die. And I even talked about that in an old market report, even in 2017, right? I
Mhm.
think it was like one on Ethereum, how I talked about how eventually the ICOs would start capitulating their ETH, and a lot of them would die because it was just too much mania, too much garbage, right? Every lot of noobs coming in raising millions of dollars through ICOs. They know nothing about crypto. They're just, hey, let's tokenize your toaster or whatever, right? Let's and people just
So here's what we're gonna do. We're gonna combine the Internet of Things with blockchain. We're gonna go to Silicon Valley and we're gonna raise $1 billion at a $10 billion valuation. We're gonna make your toaster talk to your refrigerator in a decentralized, completely secure way.
yeah, for sure. We got one question: why won't all the top 10, 15 all survive and move up? I think there's a good chance that they will. I don't necessarily think that the top 10 or 15 will necessarily stay the same. We could start to see some projects slide out, just like and one really good example of that. And this is a tool that I really like if one wants to kind of look at historical snapshots and how coins will fall out of rank in favor, is just to look at the snapshots on CoinMarketCap from like 2014, 15, 16, 17, just even
Yeah.
18, just to see like what was in the top, to top 20, which ones fell out, which ones kind of had a lot of hype, but no sustainable hype and just kind of fizzled it away, and which ones have been staples and have consistently stayed in the top type of thing. So that's a good exercise. But basically, what I mean by breaking the ice is that sometimes you just get a handful of markets will be the leaders. They'll kind of lead the charge in a way, right? Where they might make bigger gains than other markets and lead the charge to kind of, you almost need something to break correlation from Bitcoin and become non-correlated for a bit to have enough hype and momentum for it to just last on its own, like when Ethereum was doing its thing, or even at one point in 2017 there was a lot of alts when they went nuts in the initial break, the beginning of the year. They were kind of non-correlated. They didn't care. Bitcoin would go up, they'd go up. Bitcoin go down, they'd go up. They didn't really care, right? And then they
Yeah.
kind of took their turns, with their parabolic blow off top, like popcorn, like they get burnt kernels if you cook them too long, right? One at a time, they'd start popping, dropping, right? Um, and then so you could kind of like cycle through them. You could cycle through the different markets through like popcorn. But in the meantime, we're probably going to see a lot more stuff dying. And so the things that I look on my checklist for like the biggest killers of tokens and coins, in my opinion, and the way that you kind of try to reduce being too invested in things that might be on that chopping block list, because that's the ultimate killer in crypto, is like if something just completely dies, is lack of funding is a big one, right? If a project doesn't have enough of a budget or it runs out of funding, and then developers just kind of quit, that's been the death of many projects.
Oh yeah.
Obviously, projects that are overt scams, like get rich quick, projects that don't really offer anything new and innovative. They're just kind of quick copy and paste, quick fundraise, blah blah blah. They burn through the capital. Obviously, a lot of those scams usually die as a result of lack of developer activity. Once they get their money, they just kind of pack up and leave. Exchange delistings, right? You could have projects that are like still quote unquote alive with development, but exchanges delist them, so there's no liquidity for the token, nowhere to trade it, therefore it has no value. So it's like, great, so what? There's still developers coding shit for something that's worthless, great. Right? So that's another thing. So exchange delistings is a huge one. And then government regulation, like government enforcement, right? Like obviously if the SEC does a cease and desist on a project, goes after them, fines them and stuff, or demands that they do a refund or things like that, that could be a huge impact as well. And then security vulnerabilities. If a network gets hijacked, if it gets 51% attacked, if it's smaller, so you almost you got to kind of look at the list, and even though some crappy projects could still survive and might even do well, I would still rather look at that list and try to, if I'm going to be invested heavily for the next cycle, just try to do my best to pick the ones that have the least probability of kind of getting chopped on that block type of thing.
Yeah, no, that's a great point. And somebody just posted in chat, says, I have a friend that works at the Swiss regulation office that a lot of foundations, a lot of ICOs in Switzerland created based off of, and a lot of them are illegal and are going to be forced to change their structure. They were poorly advised when they started, and regulators are going to make them change their structure or stop activities. ETH is highly targeted. Yeah, so and that's why really the past 2 years, we've been focused on okay, what is the more sustainable way that people can do crypto projects and not get just slammed by governments around the world? Well, there's an existing structure in place of fundraising, which you could kind of fit that model, right? Some people agree with it, some people disagree with it. It's the old school model of Reg D, Reg CF, Reg A plus, and these are all American regulations, but I think a lot of countries are looking at that as kind of a model. And the only thing that I really disagree with on that structure is the accredited investor thing. I just think it's ridiculous that you have to be a millionaire to invest in a lot of these projects. Again, we've talked about this a lot over the past year, but I think there's going to be still a big crackdown, and a lot of the projects from either Switzerland or Asia or the US or Europe or wherever, a lot of them are going to get regulatory pressure. And that's why I think the more sustainable way to structure it is a security token, right? Just follow the existing laws that are in place. And that's kind of the benefit to Bitcoin. It was truly decentralized. There wasn't an ICO, Satoshi didn't come out and say, hey, give me a bunch of money to create this. He just created it and gave it to the world, right? And the problem is when you have individuals, people that are raising capital based on a promise of future profits, that invites a lot of shysters. That invites a lot of really shitty people into the space. And I think it's actually good to crack down on those people and get them out so the real stuff can survive.
Yeah, absolutely. To that, just to add to that point, when I look at projects, old projects or new projects, I kind of look at it on a scale of decentralization, right? If there's a lot of projects out there that are use catchwords or buzzwords, oh, it's decentralized or blah 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 blah, but really there's a lot of them that are actually highly centralized projects, right? Many of the ERC20 tokens, for example, for building new dApps and all this stuff, are all centralized around a central company. And, a lot of times even before they even have a product in place, and so on and so forth. So to me, it's if one is going to invest in something that's centralized, like an ERC20 token, you're better off actually investing in one that is a proper security token that's going to give you equity in their centralized product or service. So you could actually legitimately profit off of that, right? And then the other side of that spectrum would be more the cypherpunk crypto spectrum on that, and for that, the only thing like really truly protecting that type of crypto is the level of decentralization, right? Like Bitcoin, for example, it's probably like one of the most decentralized projects out there, and as a result, there's no like CEO to complain to, right? You can't you can't arrest a CEO of Bitcoin, right? Like it's so on that sense, it's like the opposite end of the spectrum. But problem is like a lot of the crypto projects are dying because they're using like decentralized catchphrases and stuff, but being highly centralized projects, and that don't really offer anything when you think about it.
Yeah, absolutely. So I think, we've kind of had the same theme for a long time about altcoins. I think it's really important to kind of hammer that, because we just don't want people thinking that, looking at 2017 and thinking that is going to happen again the exact same way that happened before. Obviously, there's projects that are going to attract capital and that are likely to have bull cycles. But like, I think going forward, we just need to be way more disciplined and like just precise about it, and looking at like, yes, we want to trade the momentum, but like ultimately the ones that will have the best momentum are the top quality projects, right? And especially if you're a longer term swing trader, position trader, or investor, like you want to understand what you're in, right? And if you don't, you're likely going to end up holding the bag on something that is really just vaporware. So with that said, let's just kind of talk about we've talked about the possibilities and probabilities of Bitcoin and kind of the bigger picture, looking at the weekly chart and talking about that. Here's what my plan is, right? And again, like, you guys need to follow your own plans and, follow your own position sizing and stuff like that. But this is what I'm thinking, and this is what my plans are and what I'm looking at doing over the next few days or weeks. So obviously, I'm long right now. So I have my different capital buckets. I have my accumulation plays, and I have my swing trading capital, and I have short-term trading capital when it relates to Bitcoin, right? So I haven't sold anything or any of my accumulation positions yet this year. So from, when I first started to get in over here, was underwater for a little bit, accumulated slowly through here. Didn't get nearly as big as I wanted to go early on, just because I thought this accumulation period was going to last longer. But that's why I bought the breakout here. And even that wasn't huge. So what I'm looking at now, though, is, okay, we have clear market structure and we know what the potentials are on a bigger basis, right? So like, I'm looking at, if we break, call it the 9K zone, there's a potential that we could get a 30% washout to retest prior support. If we break out above 12K, we're looking at, 15K kind of as the first area, 20K as the second area. With that in mind, and knowing that I have a cost basis here in the 9K range, in the high 9Ks, I'm not willing to take a 30% drawdown on that with this average cost being so high. So what I'm looking at is, if this can hold out or hold up, and if we get a breakout above 12K, I'll hold that and look for my profit targets and stick to that plan. If my plan starts to deteriorate, and if we, this could happen in one day, or it could be a slow bleed. But basically, if we break below 9K support, I'm going to look to get out of that. And I'm also going to look to scale out some of the accumulation play. Like, I actually didn't sell any of the accumulation on the parabolic move like you did, Rocky. I was just waiting and just wanted to see the bigger trend. So I'm willing to hold longer if price action stays bullish. But in the event that things start to break down and we either get a fast 30% washout, or just, kind of that slow grind to the downside like we talked about, I'm not going to hold that. The way that I'm looking at it is I want to take a graceful exit, meaning I don't necessarily care if I'm in the green a little bit or if it's a break even or if it's a small loser. I'm just going to look to cut that off, not bag hold the dip buy. And then if we do get some kind of really nice either fast bounce play down around 6K or another bull setup, I'll re-enter at that time. But I prefer on these types of swing trades to keep the risk capped as best I can. If it plays out and holds up and respects my plan, great. I'm not going to over manage that. But if we break where I think the market should not go for that specific trade setup, then I'm not going to bag hold or like wish that it was doing what I wanted. I'm just going to cut it off, be objective about it, and wait for the next play. So that's really it. What about you, Rock? What are you thinking?
Yeah, if we I didn't buy back in yet. If we snap that area, then I wouldn't be buying at 85 like I originally want to. Like when I'd set my 85 bid, the price was at 13K. If we were to grind and snap below the 9K area, I'd probably stack a bit lower. Depending on how it dumps, I would maybe aim for, maybe around the 7K zone or whatnot. That first kind of, that prior level of support, I'd probably take a stab with part of the capital there for a bounce type of thing. And then, I'd be willing to buy down to 6K. If 6K were to snap, then those orders I'd cut and then hit a reset and look for some lower stuff. So I would just kind of play that game if we flipped into that type of a bear scenario. If Bitcoin flips into the bull scenario, or continues going sideways and consolidating, I'd be looking at altcoins. One of the reasons why I wasn't like super keen on just buying back into BTC, even though I saw the same thing you were seeing at the 9K area, it was mostly just for tax reasons. If I start buying lower but higher up, I'm just creating more taxable events for myself because I'm invested in Bitcoin. But if there's a dip that's really, really juicy that I just can't pass up, then I'm definitely going to take that with that capital. It has to really be worth my while. But I've been really keen. I've been wanting to play some swings on an alt market, but I'm just patiently waiting waiting for signs of the tides shifting on that before doing that. I would prefer, if I had to choose between the two, I would prefer to trade an alt market, one preferably that I'm not invested in, just to not create these taxable events for myself, to make my life simpler for 2020. So I'm kind of thinking ahead there. Interesting enough, a lot of alts popped green today. Could just be a small little dead cat worth watching. I don't know why. I think ETC kind of went nuts today. I'm not quite sure why. Maybe because of the hard fork coming up or something.
Yeah, I think it's just anticipation of that. And I mean, if you look though, like longer term, it's kind of mid-range. Like to me, there's really nothing actionable there, in my opinion.
Yeah, like I would be looking for, I'd want to see some alt markets having clean breakouts, right? Yeah. Obviously, they sold off a lot since the last local top, since the last local highs. And a lot of them have kind of grinded down at support. So, seeing some green and some bounces certainly doesn't surprise me. Yeah. But the main thing that we want to look for is the difference between like just a lower high dead cat bounce versus follow through breakout with some momentum, right, into another kind of alt season. Like a real alt season will have some momentum after the breakouts, right?
Yeah, and like for example, like we were talking about with Ripple, like this could be a random kind of mid-range pop and then chop around. But if it broke 10K, that emotional price, or 10K.
If it broke 10K.
If it broke $10, that would be the first sign of like real strength, in my opinion.
Yeah, for sure. And the thing is that if those alt markets shift, you don't have to chase or catch the first breakouts and pumps necessarily, right?
Yeah.
Especially if it starts to trickle through. There's, like I said, there's usually a couple leaders for whatever reason, whatever the flavor of the day is. There's usually a couple leaders that lead the charge, and
Yeah.
then you can see it cycle, and so they can show the path of least resistance, similar to like the alt bounces we saw at the beginning of the year, pretty much, right? Like at springtime, we had a few market leaders that. Now, a lot of them underperformed. A lot of them actually even underperformed Bitcoin. Initially, they didn't, but overall, a lot of them had underperformed Bitcoin percentage-wise from low to high.
Yeah. But Litecoin with the halving, this was kind of an interesting example where it was kind of leading on the way down, then leading on the way up in anticipation of the halving, which, is kind of like a buy in anticipation of that and then a sell prior to the event. That's usually how these things go. It's like people pile in because it's a scheduled event, right? It's not like a surprise event that causes an emotional reaction. Everybody has that information. There's no informational edge there, right? So it's like, all right, so you have to be kind of super early to it.
Yeah, you pretty much like the play for something like that is you buy in at the lows when everyone's scared, months ahead of time before people start to really think about it,
and before CoinDesk and all the other like crypto news sites start posting, halving coming up in 60 days, 30 days, then that's when retail app traders that just start to go, okay, so halving means this thing's going to double, let me buy at 120, not thinking that just a couple months prior it was at 20.
Yes, yeah, exactly.
So kind of thinking about this, just going back to Bitcoin real quick. So the bear case, this is kind of how I'm thinking about it. And I think we're pretty much in agreement here is if we get a snap down, if there's a fast washout to the 6K area, right? And we'll have to see what the price action looks like if we get that. But for now, I'm just calling it the 6K area. Could be lower, could be higher. But if you had a fast washout, that could be a nice dip buy, and when we say nice dip buy on a fast washout, it's really anything over like a 30% sell off. Kind of, if you just go back and back test this manually since Bitcoin's inception, and you look at when you get those big washouts, so it could be 6K, it could be this prior support here around like 7K or 7,500. You have to let price action be the guide on those. But if you get like 1 to 3 days of like big selling like that, that's typically when you get those really nice faster bounce plays, right? It might not be a good long-term multi-month hold, but if you can get a 30, 40, 50% bounce play and then close it in a day, 2 or 3, that's really more of like a shorter term kind of nice, you could call it a day trade, but it's really a shorter term swing trade. Or if there's a slow grind, say it doesn't give you that washout, but say it kind of respects this downward trending channel and it just kind of grinds out, then really what I would want to see is some kind of reversal pattern, right? Like down here, we had the double bottom, might be a head and shoulders, something like that. Otherwise you get kind of caught in that slow grind. Where the bull case, like say this holds up, 9K respects, then my plan is I'm going to hold the existing position for targets and then potentially even add on a 1, 2, 3, 4 breakout, right? So imagine if this turns into a multi-month ascending wedge and we start to squeeze back into 12 to 13K, I would actually entertain the idea of adding, potentially even doubling that position size on a breakout, looking for the 15 to 20K as the profit targets there. Just because that's really my bread and butter. Those are my favorite types of trades, is these types of breakouts where you have multiple months of consolidation. And then when you do get that breakout, you can get a 50 to 100% move that is usually pretty quick in comparison to the consolidation period.
There are two signs, rather than folks trying to predict when alt season's going to happen or find the bottom or anything like that. There are two signs that I would look for confirmation of an alt season. One would be, and both of these would be revolved around Bitcoin making big moves, right? One would be if Bitcoin were to break out and make a big move upwards. Typically, what we've been seeing lately since the retrace is we've been seeing alts keeping stable USD value on that happening, but losing on the BTC charts, right?
Right. Yeah.
And then typically what we've been seeing when Bitcoin has dumped recently is we see alts losing USD value and BTC value, right?
Yeah.
So
Yeah.
what I would look for is that if Bitcoin were to have a big breakout and if alts were to gain generally in BTC and USD, if Bitcoin were to break out and alts were to gain a higher percentage, that would be the first sign of a trend shift. That would be the first sign of the winds shifting, right? Or if Bitcoin had a massive dump and alts suddenly just decide to go green on that, then suddenly it could show an inverse correlation. So those would be the two things I would look for, right?
For example, like say Bitcoin, and I'm not saying this is going to happen, but let's just use this as an example. Say Bitcoin over the next week, like a really fast move, it goes from 10K to 15K. So call it a 45, 50% move, right? And then you have something like Tezos that goes from $1.50 to, $2.50 to $3, right? So like if Bitcoin did a 50% move, and then you had some of these projects that did a 100 or 150 or something like that, I think that's kind of what you're talking about, right?
Yeah, they start gaining over Bitcoin. The best sign, like the one best example of that would be like when Bitcoin broke out of the lower accumulation range initially. For the first couple of moves up, alts had gained higher percentage wise in general, right? It was moving with Bitcoin, but they're gaining higher percentage wise on both the BTC and USD charts. That's the type of behavior I would look for. And the thing is that as soon as you see a sign of that, it's not like that's like the be all and end all. Usually that's just a sign of like recharge momentum. It's like the winds shift, and then you usually get several weeks of momentum in favor of the bull trend type of thing, right?
Yeah.
So that's what it would look like, and that's a much easier way of confirmation of waiting, because than just like trying to knife catch every bottom or chasing every little dead cat that happens.
Yeah.
Right.
Yeah. Rookie traders are typically more eager and like they don't want to miss the move, right? So they're like the first sign of a move, they're like, okay, we're in. But there's a lot of false signals as like a lot of these projects are bleeding value. So like I agree with you, and I think it makes sense to wait for confirmation of a longer term capital flow into something, right? Like you don't want to just catch the pop and flop. You want to look for signs that, hey, a multi-month or a multi-year trend is developing.
Yeah, absolutely.
Yeah. Cool. So that's kind of it. Just talking about a few other altcoins real quick. I saw there was some news on BAT. Again, this is one that I bought a little bit, could have, scaled out and treated it like a trade and had more taxable events. But obviously because of the like-kind exchange stuff in the US, I'm trying to trade less because of that. Taxes are real, folks.
Well, you have the difference between in the States long and short-term capital gains.
Yeah.
Right, and that can, for some, maybe not in Texas where the state there's no state income tax, but in some places that can mean the difference between like a 25% gain versus a 50%. Right.
It's crazy. And now like the IRS is saying like, okay, cross coin transactions are now taxable, which I think is bullshit, but hey, not going to fight the tax man. So yeah, I mean, I'm just being more patient. And this again is even more of an accumulation play for me anyway. It's a highly speculative play. It's like, can Brave actually do something? the odds are actually stacked against them. So I give this less than a 50% probability, which is why I'm sized so small on it. Like this is not a big position for me at all. Ethereum, I'm still not interested in a long here. We had a nice little trade. What was it, like a 50% gain or something? But I'm not interested in any kind of choppiness. I'm not overthinking this at all. If anything, I'm more bearish. Not going to short Ethereum, but I'm more bearish short term on it for reasons we've talked about. Then you got a bunch of like smaller projects that I'm just not actively trading. Tezos has been kind of the one that has the most recent action. This is actually kind of funny. I was, as a lot of you guys know, Tezos listed on Coinbase recently. And so here's kind of the story behind it. If you don't know, if we look at the daily chart, it was like, here's the Coinbase announcement. The listing was obviously at the high, but what's even funnier and more interesting is that when Coinbase launched their app, like your phone app, where non-pro users could buy, we had the really, really fast arbitrage opportunity where you could buy on Kraken at like, what was it, 150 or 130 at one point, and then sell on Coinbase for like almost $2. Again, the ARB opportunity got eaten up really quickly because there's more traders nowadays. But what happened is you had all these people just randomly buying, not thinking about the price. So think about this. If you're somebody who really doesn't pay attention to crypto and all you pay attention to is the hype news, and you look on your app and you get a notification saying, hey, this hot new coin is listed on the app now and you can buy it. Oh, cool. It's only $1. Okay, let me throw $5,000 at it, or let me throw $100 at it, or whatever, right?
Yeah.
Then what happens is that person ends up buying the high, and then they see like, oh crap, over the next few days, they're like, that was a terrible decision. I'm down, call it like 25, 30%. And then it bleeds out. And then you wake up one day and you look at your app and you see a big red sign that says, oh, it's down, 20% over the last 24 hours. You're going, okay, I'm down half. I'm down 50%. I bought $5,000 worth. Now it's only worth $2,500. Crap, I'm just going to sell. Then they end up selling the low. That's why these markets have these inflection points. It's mostly driven by really stupid investors. And, you can call them investors, traders, speculators, whatever. These spikes are caused by that emotional money. And if you just do the opposite of what the majority of these people do, you're going to put yourself in a position to where the odds are in your favor. But I just think it's really interesting to use these as case studies to learn from, because it's so funny to me to see how blatantly obvious it is. But, most people just don't get it.
Yeah, definitely. And it's almost like at this point with exchange listings, it's almost habitual now that there's going to be massive dumps if there's a spike. If a market spikes up on an exchange listing, then there's a very, very high probability it's gonna sell off and dump afterwards. The exchange listings are nice for longer term liquidity and blah blah blah, that stuff, sure, but immediately they tend to be sell in the news type events after they spike. That's the caveat. That's the key point. You got it, like after the spike. Sometimes there can be a delayed effect. It can, could be a few days before. But pretty much, like, I think it's pretty much happened to like every Coinbase listing that I've seen. Even a lot of Binance listings, same thing.
Yeah, I mean, there's no edge to it, right? There's no informational edge. There's really no significant speed edge. So, and that's really, just talking about Tezos real quick, like obviously we know that there is smart money in this, and like this is kind of like has the potential to be kind of the next evolution. The problem that I see from a trader's perspective, and the thing that I'm questioning, that I don't know the answer to this yet, is this a crowded trade at this point? Like, is everybody in that wants to be in, or and I'm thinking, 6 to 12 months out, what does this hard right edge look like? Is it like, okay, all the capitals that wanted to be in Tezos is in, and then we're just going to kind of see flat or a slow bleed? Or is this going to maintain kind of the immediate price action and give us something like this, right? Where we actually break into a much longer bull trend, right? This is obviously where our chips are, right? By being position long. I just don't know, and that's the hard part with like these early projects, right? Is like you get in, you have a thesis, you try to manage risk as best you can, and they either double or triple and gain more eyeballs and capital over the longer term, or they kind of fizzle out, right? That's why I think position sizing is so important with this early stuff.
Yeah, exactly, for sure. And that's the thing. Nobody knows what the outcome of any of this will be, really, in the big picture. And it's good to acknowledge that. It's good to, look at all those possibilities and to acknowledge that. And to also identify like what kind of setup is it for you as an individual, right? Like some people perhaps were trading just the swings, more the midterm swings because of the volatility around the hype. And that's fine, right? For some people, it's just like midterm trades.
Trade the waves.
Trade the waves, for sure. For me, I'm at least based on the knowledge I've taken from the last cycle. I'm trying to replicate some moves from the last cycle. Maybe it doesn't produce as high percentages or whatnot. But basically trying to do like cycle to cycle trading, reduce taxable events, so on and so forth. But that's my plan and my thesis and my strategy. It doesn't necessarily guarantee that it's going to work. I've stacked heavier chips on playing that particular strategy. But obviously, again, like there's no guarantees with that. But I treat this much differently than I would, let's say, more of a midterm type trade scenario, right? Swing trade type scenario, where I would actually, in a lot of cases, just kind of set a stop or just have much smaller targets, shorter targets, right? Creating more trades and events. Like recently, I took a punt at Atom at support, Cosmos. And I was like, this is not a 32x above the ICO price. This is not something that I'm willing to bag hold if it wants to go down. It snapped support. I took a graceful exit, 7-8%, whatever, on a partial size. It was fine. I took a swing and I was like, nah, it's not ready. Maybe it's gonna bleed out more. If it starts to, if altcoins start to trend and we start to see some breakouts, some momentum, then I'll probably like re-examine that. It's one market that's been on my radar just because I think it's it also is an interesting project, and it's not something I'm invested in because for myself, like I really don't want to invest in something that's 32x the ICO price, but if it has its own bull trend or its bull market or whatever, that's a market that, because it's so high above the ICO price and I'm not invested in it, it's not going to be additional taxes for me. So I could trade specific breakouts or dip buys with specific targets, shorter term targets and stuff like that. So for me, strategically, I want to pick a few markets I'm not invested in for those types of setups. But I haven't, there's no real clear indication that anything's really trending with momentum. Things have been fairly choppy and very much correlated and centered around Bitcoin's movements. So I'm looking for some fresh independent momentum on some stuff before I look at that. And I have the capital sitting on Kraken for basically the longest part of 2019. I pulled all my capital off the exchanges, a lot of it into crypto, and then some of it back into the bank. But this is capital on Kraken that I'm willing to go for like more shorter term or midterm swings if the opportunities present itself, right?
Yep. And Goldie asked, wouldn't Tezos go up fast if Bitcoin goes up? My guess is that, so that's a good question. And capital flow, like we've seen different patterns over the past, 7 years. Like sometimes you'll see where Bitcoin will go up. And like Rocky was saying a minute ago, like what we've seen this year is Bitcoin goes up and then altcoins for the most part can stay flat on the dollar value, but they go down against Bitcoin. Basically what that means is there's an opportunity cost to not being in Bitcoin. But then the other scenario is that you get markets, and Rocky and I both alluded to this, that you get some markets that get uncorrelated to Bitcoin, where like maybe Bitcoin starts the trend, like say we get a breakout above 12K on Bitcoin, and then like say Tezos sees a little volatility because of that, but after Bitcoin makes a big move, typically we see higher quality projects gain after a big Bitcoin move, because when people take profit out of Bitcoin, not everybody just sells back into fiat. A lot of people, in fact, go, okay, I doubled my money on Bitcoin. What else is there? And then they go hunting, right? And then that causes kind of like Rocky said, like a follow-on wave of capital where it flowed into Bitcoin, and then when it flowed back out, it went into some projects. So that's what I think is probably the most likely scenario. I don't know. What do you think, Rock?
Yeah, no, for sure. I definitely agree with what you just said. There's something else on my radar that we can discuss as far as news. Is there are some key dates coming up as far as Bitcoin and such. You probably heard this, Chris, but Bakkt did get approved, so that's coming up.
They're launching, I think, in 1 month, right? Like September 20 something, 23rd.
Yeah, September 23rd, which is on the fall equinox. So that's kind of interesting.
Oh wow.
I don't necessarily like predicting how the market's going to respond to that. I imagine, like, basically, I'm obviously leaning towards bulls. So there's one thing I also want to make clear about my own personal perspective on all of this, is that even though we look at both sides and plan for both sides, I still personally think the Bitcoin market structure is bullish, and we do have some possible bullish events on the horizon that are coming up very shortly.
Oh, check this out. Sorry to interrupt you. That just popped.
Oh. Interesting.
What? Let's see. Okay.
I wonder if the market sold off on that.
Wait, what? Hang on. He will be
to ensure and other reasons after admitting to a 3-year relationship with a Russian agent currently serving 18 months ago. Oh.
Okay, wait. What? Okay, let's check the stock.
Overstock. So he's dating a Russian agent. Only in crypto.
Let's see.
Oh, the stock is bouncing.
I don't know. I don't think this is a live feed on TradingView for equities, though. Hang on.
It's funny. Oh no, actually no. That's. I think 20. It's selling off.
Yeah, I guess that is live. It's not really reacting. That's weird. Maybe people haven't seen it yet. We'll keep this up in case.
Oh well, this just broke out. This news.
I think it was just now.
Okay, it seems like on a smaller time frame, it's starting to sell off. It just, I mean, a little bit. That could accelerate. We're down like.
When did this hit? Let's see, the New York Times.
Wonder how that'll impact T0.
Wait, this isn't new. Okay. Yeah, I didn't read the news earlier today, and then okay. So okay. That's why there's not a strong reaction. I haven't been paying attention to it this week, so it looks like the initial reaction. Okay, that makes sense. So basically,
that was last week's big sell-off on Overstock. Yeah. Now we're in the bounce play a little bit.
Yeah, it's so weird. I wonder. Let me check on T0.
Curious how that'll impact T0.
Yeah, it's
Or if he's stepping down from that project.
it's like there was a little selling, but yeah, it doesn't say anything about that. Anyway, I'll get myself caught up on it and then post something in chat once I kind of look at it. I don't know. Overstock's been kind of rocky as far as the retail business anyway for a while. Hopefully this doesn't affect T0. So I don't have it. I don't own any Overstock stock, but I do own the T0 security token. So that'll be interesting.
So going back to Backed on the 23rd, rather than, like, anytime we have a known news event, rather than trying to absolutely predict how the market's going to respond, I just wait and observe how the market's going to respond. And whatever it's doing close to the event, if it gets too exaggerated, it's usually a good idea to do the opposite, right?
Yeah.
So for example, if we broke out leading up to the 23rd and we went on a huge rally and let's say retested all-time highs going up to the 23rd, then to me, we'd be due for some counterforce correction, sell on the news type scenario, right?
Yeah.
If the market does nothing and just continues to consolidate and does nothing and then breaks out after the news event, then suddenly, that's like there's a delayed reaction and some bullish momentum as a result of that. Or maybe the bullish momentum is created as a result of new participants being able to purchase Bitcoin through the Backed product. There could be fundamentally could affect the supply and demand dynamics that is not currently affecting the market. Leading up to it would be more hype driven. Post Backed would probably be more supply and demand driven, right? It would be a sign that, well, we would be able to look at their volume too, right?
Yeah.
So these are all, what's cool about it is they're Bitcoin settled futures instead of cash settled. So that, obviously that's a little bit better for buying Bitcoin, for longing Bitcoin, for accumulating, so on and so forth. On top of that, on October 13th, we have the Bitwise ETF final decision.
Yep.
October 18th, we have the VanEck SolidX ETF final decision. So that's like mid-October. That news can definitely impact the price. We all know that crypto is very news-driven, based on supply and demand, but also hype. It's very news-driven, right? Obviously, if an ETF was approved, I think that would be obviously very bullish. That would be like a white swan event. It'd be a random good news event that we know something's going to happen. If it gets rejected, then the opposite. But rather than trying to, one doesn't have to predict or guess what's going to happen. You just have to observe market behavior based around those events.
Yeah.
And usually position yourself to either, start riding a trend on fresh momentum or trade against the market if things are getting too exaggerated closer to the events. Like if the ETFs got rejected and you had a massive sell-off as a result of that news, then, perhaps lean towards a dip buy, a bounce play, to capture the counterforce off of that and so on and so forth.
Man, how sweet would this be? Like, so knowing that these are the two dates, say it like we got something where it worked up like this, so like say we kind of held up and chopped around and then we started to challenge this and then there was a breakout on the launch or shortly after the launch and then the ETF got approved and then that drove us higher. That would actually be a fundamentally driven reason to expect an all-time high break, in my opinion.
Yes, definitely. Definitely. I completely agree with that. That would be some fundamental, it would be a fundamental match to add to the technical consolidation, which is just a pile of gassed rags.
Yeah.
Right? Like right now, like we don't know what the news is going to be. The market structure is still bullish. It still produced higher highs and higher lows. It had a healthy correction. I think it was probably 36 or 37% or whatever the percentage correction was. Definitely healthy. It's consolidating sideways. That's
Yep.
healthy. We've seen this triangle patterns before in consolidation. If you had a match fundamental event to trigger a breakout, then all of that would line up for a more sustainable bull trend, in my opinion, and exactly a break of the all-time high. And we trade accordingly, right? Like I would actually at that point I would consider taking some of the profit that I'd taken into fiat and consider like buying back in to long the breakout if something like that were to happen.
Yeah.
Right. To kind of ride that. I've got wiggle room because I sold at 13K. So that gives me wiggle room. And I was doing that preemptively before the correction on the front end of the parabola. So I have some wiggle room there. I'm okay with adding on a breakout if things suddenly shifted really, really bullish again, right? Just to ride some extra profit. So that'd kind of just be like playing the wave a little bit, right?
Yeah, I mean, from a risk reward standpoint, I'm kind of thinking of that. So like right now, my average is below 10. If I did say I doubled up at 12 or 13, have an average around 11 with risk down to 9, 11 to 15. Yeah, I could structure that in a way that the risk was good too. So I don't know. That's my ideal scenario. We'll have to see if something like that plays out.
For sure. So those are important dates to pay attention to. See how the market responds leading up to it. With the back thing, I wouldn't surprise me. And you can. The thing is too is like we've even we looked at this at our trading event too. We were back testing the Bitcoin charts and such. And sometimes you can get capitulation shakeouts before another bullish move up too, right? Sometimes it could be like, there's let's just hunt some stops, fill some low bids, and then the market starts to rally leading up to the event. So there's obviously many different scenarios and ways that this can play out, and we're not trying to make predictions, right? We know what we know and we know what we don't know.
Yeah.
Right. Like
that's a really good point. It's not like we're trying to guess what's going to happen. We got to look at all the possible outcomes and then like try to structure a plan around all of them.
That's right. I love responding and trading on the market. Sometimes that's preemptive. Obviously, like when the prices were low and Bitcoin was capitulating, I was still responding. I was responding to the Bitcoin capitulation as it was dumping low, preemptively positioning myself for a reversal, knowing that, okay, we tore the Band-Aid off. The probabilities of hitting a new cycle are now higher now that we've ripped that Band-Aid off, now we're capitulated. But obviously there's still no guarantees. And then, with Chris with the early breakout too, when we broke out, he added to his positions on the breakout. Again, that was responding to the markets, but responding early.
Yeah.
When I took some profit on the front end of that parabola, 13K, that was preemptive, but I was still responding to the markets. They were going up vertical at the time. Now they're a lot healthier. And so now the market's consolidating and chilling, and now I'm responding to that by also chilling. And whatever the next, whatever the next move is.
Harry asked earlier, he goes, do you find trading quote unquote easy? And like, I would say like, obviously, trading is not easy, but you can make it simple by doing this, right? Like learn the foundation, right? Learn all the stuff you need to know, practice learning how to create trading plans and looking at possibilities and probabilities. And when you do that, you get clarity. And then you learn how to like wait for scenarios that play out, right? And if you try to force it or get too cute with it or try to guess what the market's going to do or outsmart the market, that's when you get run over.
Yeah, absolutely. So there's a lot of different ways to make money on both those scenarios, and where things start to get really tricky and where you're taking on more risk to reward and more stress. It really depends on what style of trading. We've obviously been leaning a lot more towards position trading and long-term investing in this cycle. having done a lot more hustling and also swing trading, but smaller not positions, percentage moves in the last cycle, all kinds of stuff, more arbitrage, just a lot more stuff. Now it's like kind of de-stressing and just going for the bigger moves on the spot markets. One can like increase their level of risk and stress and all that stuff. It's completely up to you. The best way to do that is start trading leverage, doing futures and stuff. Personally, myself, my days of trading leverage stuff, unless there's something really, really crazy that's screaming you have to short because it's so ridiculous, or you have to hedge, for example, use a short to perhaps hedge longer term holdings and stuff. But my days of doing that are behind me, right? That I'm not really interested in that just based on my current life. Right?
Yeah, absolutely. I mean, the progression of a trader is like, I've seen a lot of people go through this where it's like, step one, you got to make a lot of mistakes. Step two, you kind of find your sweet spot and you hustle and you find things that work in the market, and then you grow. And then you're either lucky with timing where like the markets kind of just cooperate and give you great opportunity, or you have to wait a bit, which again, that's outside of your control. And then as you evolve, you kind of find what you prefer to do, right? And at first you might try to do everything. And then later in your career, you might find like, oh, I'm a much better swing trader, or I'm not that patient. I hate waiting weeks. So I'm going to go for the shorter term stuff, right? Just got to go with, what fits your personality and risk tolerance. And so let's do this. We've been going for an hour and a half. Let's do a little bit of Q&A. Manny was asking, would you use hard stops to get out of the trade if it goes below 9K, or will you pull the trigger manually? So this is kind of a blanket statement for, I get this question a lot about like using stops. I've used stops on other markets, but I try to only use hard stops on Bitcoin. And the reason why is because other less liquid markets have flash crashes so often, especially around where you would want to put a stop. We've seen that even with Ethereum is like, in my opinion, one of the worst. You get these like washouts and these flash crashes that just take everybody out. So like, I can't remember if I've actually ever used a hard stop with Ethereum. Now, with that said, the hard stops that I do use in Bitcoin are for if I'm sleeping, or if I'm on a flight, or if I'm on a hike in the woods and I don't have internet and something happens. And I look at stops for me, like stop market orders that are placed on an exchange, those are what we call hard stops. Those for me are worst case scenario. Like, it broke down and like you didn't have a chance to get out. What I prefer to do, because you get less slippage and better, tighter fills and stuff, is I will create alerts, right? So I'll come in and say like, where would I want to know if price was breaking down? So like in this example, if I zoom in, I'd say like, I'm interested in knowing, like say I'm on a phone call or I'm taking my dog out or whatever. And I'm like, I want to know if price starts to challenge this price level, because that means it would be breaking the trend line and this lower low and kind of getting below where this trading action happened, and I'd be underwater, right? So I'm like, all right, well, I would want to set an alert here, and you could do this on whatever platform you want, but I just want to know if price is coming through that. And so say I'm not paying attention, which I don't do. I don't sit here and watch the charts all day, every day. I don't think anybody should do that. It'll drive me insane. But if price starts to break through this level, I want to know about that. What I also might do is have my hard stop. If I choose to place one, I'm going to put it well below where I want to get out. So I might have an actual stop on an exchange somewhere down here below where I think the market should not go, right? So, and I'm trying to think when the last time I actually had a stop hit. The last actual like hard order I had hit was actually a stop limit on the breakout here. So like I had, so case in point, like this happened to be an entry, not an exit, but I had some orders stacked here in the low 4K range. If you guys recall in the classes and the trade alerts and stuff, I actually ended up getting filled here because I was sleeping. Now, again, that was an entry, not an exit. And I can't remember the last time I actually had a stop filled in Bitcoin because of that strategy. And like, knock on wood, literally knock on wood, like I have not had a detrimental trade where like I was on a flight or sleeping or something and I woke up and I was down like 50%. Like, most of the time I'm at a position where I can get to the market either manually or with hard orders before something like catastrophic happens, right? And that's one of the risks of Bitcoin is it's a 24/7 market. There is no open and close. It's open all the time, right? So there's positive things to that, but there's also like the risk of like you could not be paying attention and a move happens where you either miss an entry or miss an exit. So that's how I do it. Does that make sense, guys? Everybody understand like why I do that? So again, like to recap, it's like I identify areas of interest. I set alerts around those areas of interest. And then like say something happened where there was a black swan event or I noticed like, hey, there's heavy selling coming in. I might take a graceful exit on the snap of this support where I have my hard stop order down here, you know, in the mid 8K range, but I'm actually able to manually exit much closer. Maybe instead of being down, you know, 10%, maybe I get out with a 2 or a 3% loss, right? That's kind of how I try to manage it. Cool. What else, guys? So what about T0 becoming open to non-credited investors in August? Yeah, I mean, that definitely gave the ability to a larger investor base. There's still kind of a pain of going through Dyno's setup process. So I don't think they got a rush of new buyers. I don't know though. Do you have a mobile app? Yeah, I mean, you can use TradingView. You could use Coinigy. You could use Coinbase. I mean, there are endless amounts of apps that you can have. And sometimes I'll set alerts on multiple apps just to be sure. Cool. Rocky, was there anything else you wanted to cover, bro?
I think that was about it.
Cool.
At least that's all the notable stuff that I've seen this week. So I'm just kind of waiting to see how this consolidation plays out with leaning towards bull, but
Yep.
prepared for anything really. I mean, we're doing pretty damn good compared to where we were at the beginning of the year. So, unless
Yep.
of course one was hunting for like cheap deals, depends on how.
Yeah. Yeah, we've got, like you said, I mean, we got some big news coming up in the next 30 to 60 days. And we're at kind of a key level right now. So I'm going to be keeping a close eye on this squeeze and hopefully we get some movement over the next few days or weeks.
Absolutely.
Awesome. All right, guys. Well, thanks for hanging out with us. And if you guys need anything else, we'll be in chat.
Sounds good, folks.